Hi, welcome everybody. Welcome to webinar. Just let you know, I'm gonna give you a couple of minutes just to grab a coffee, a drink, a snack, a notepad, whatever it is you need to get ready for this webinar. And yeah, we'll get things started in a couple of minutes. Feel free to let me know in the comments where you're tuning in from. And yeah, we'll get things started soon. For anyone just joining now, we're going to get things started in a minute, just giving you guys time just to grab a drink, whatever you need to get ready for the webinar. And yeah, we'll get things started shortly. Perfect. Well, if you haven't had a drink, yeah, I've had 2 minutes to get it. So I think, yeah, we'll get things started. So good morning, everyone. Welcome to Spendesk and Pipe's webinar, the CFO Playbook, 4 key strategies to beat the economic downturn. My name's Kate. I'm an account executive at Spendesk, and I'm going to be your moderator for today. Before I introduce the panel, I just wanted to go over some housekeeping items. So first, feel free to submit any questions throughout the webinar using the questions tab at the bottom right-hand side of the screen. Although please note, we will only be answering these questions at the end of the webinar. Lastly, just to let you guys know, we will have a recording of this webinar and that will be available on demand after the webinar, and you'll receive an email with all the information in the coming days. With all of that out the way, I would love to introduce to you our panel today. So today I am joined by Julian Lafuge, Danielle Keevan, and Lucas Wagner. So Julian, it'd be great to get a brief introduction to yourself, then Lucas, then Danielle.
Yeah, very happy to be here. So I'm Julian, I'm based in Paris. I've been CFO of scale-ups for 7 years. Really happy about it. I guess I like it. It's you never get bored. Before that, I did both finance in corporations and general management.
Perfect. Thank you for that. Yeah, of course. Lucas, great to get an introduction to yourself.
Yeah, of course. Thanks, Kate. So I'm Lucas. I'm based in Frankfurt, but work for Pipe, which is located in Miami, Florida. We're a recurring revenue trading platform, so we give operators, founders access to non-dilutive capital. And yeah, in my previous life, I've basically been in finance for startups and scale-ups my entire career. So this is what I love talking about.
Never boring. Perfect. And last but no means least, Danielle.
Loving the energy, Kate. You make it sound fun already. I'm Danielle from Paddle. I'm the VP of Finance. I've been there for about 1.5 years. In the tech space, my background has been at Booking, the finance operations, as well as MessageBird, so hospitality as well as telecom. And previously, I was more in more structured organizations such as corporate hospitality. So I think I've been in the tech space now for about 10, 15 years, I think. Time really flies when you're having fun. Love the whole chaos. I think I thrive on it, and I love getting a hold of it and organizing it and definitely scaling. So very excited to be in a scale-up tech space.
Lovely. I think we've got an absolute beacon of finance wisdom amongst us today. So yeah, really, really excited. Yeah, to get things started and get stuck into the webinar. So yeah, first things first, before we actually go into each strategy, let's kick things off with some more general questions. So Julian, picking on you first, what challenges have you and your finance function experienced as a result of this economic downturn?
Thank you. So first, there's one which is not a challenge for you, but is the first thing that I guess you think about when you're in finances. Do I have the funding, right? And we don't have this challenge because there was foresight and we're well capitalized and so on. But that's kind of, you don't do anything if you don't have that. Now, maybe a second one, and I'll let obviously the others complement, is I guess when you have this downturn, you have to do two things at the same time, and basically it's continue to grow, because that's what's exciting, and that's how you create value. You don't build a great company by cutting costs or whatever. You do it by growing the top line and serving more clients and delivering the value of your product. But on the other hand, when the economic downturn comes, then you have a cultural shift to operate in terms of how you spend and on what you spend, in what I call the spending culture. And to be honest, it's more of a soft aspect than just hard, right? So we'll probably come back to that, and it's not only soft, but I think that in terms of the challenge, after years of free and easy money and so on, even if Spendesk was never growth at all costs and was always reasonable, you still have a lot of nice to haves in terms of spend and so on. And you have to ask yourself as an organization, and then at the department level and individual level, okay, how do I keep growing while optimizing my spend? So that I'll stop here.
Definitely, and it's kind of definitely going to go into this later, but it's bridging sort of, which ones are necessities and which ones are nice to have. Definitely, really valid point there, Julian. I think as well, we've seen a lot of companies, make changes as we do go into 2023. Daniel, it'd be great to hear sort of your initial reaction to the current economic climate and some of your first reflexes as a finance leader.
And I think for most of us in finance, the journey for 2023 started last year. So I think we've really seen the hit come in and really, I think, responded accordingly. I think one of the biggest changes that I see is that the finance function, while always critical, has moved significantly more to front of the house. It's no longer a luxury. We are now definitely leveraged and seen as the compass as well. What has also changed, and what I've seen change through the industry as well, is adherence and the importance of a budget. I think often in a very early tech space, budget is seen as something that's completely unnecessary, whereas now it's really a guiding compass and so critical to determine where your spend is, how much revenue you're expecting. And I think one of the things is as well is unfortunately not to be overly optimistic, just to make sure that you hit your targets and retain that confidence of your investors as a company as well. The other big change I've seen is in controlled spending. And I think Julian also touched a bit on this. Historically, I think tech space is a little bit more lenient and fewer controls in terms of spend. And now with finance moving to the forefront of the organization, not only are we guiding through budget, but we're also enforcing compliance and working together with stakeholders, right? And I don't think it's meant to be as a restriction. So I think it's so critical to tell the story why, and to make sure that you're in it together as a company, as a team, every single employee, every single partner. It shouldn't just be a finance effort. And I see a more awareness through the organizations that we're working with in managing the spend, but doing it so together and not being upset at finance for having additional controls or limiting it.
Yeah, definitely. It sounded like almost sort of bridging the two, sort of empowering, employees to do their job, but also bridging that with the control and finance to sort of have this oversight over spending. A really interesting point. And I guess, Lucas, following on from that, maybe what were your biggest concerns in the direction the economy was turning?
Yeah, I mean, I obviously have to agree with Julian and Danielle on all of the things called like internally, right? Like FP&A, moving to the front of the house, making sure that we empower all of our team members across the entire team, right? Not only folks across the finance org or the classic, spend departments like marketing, or where there's a lot of budget conversations anyways, but also folks that are in IT, they're acquiring software, right? Empowering them to basically make them aware, hey, look, this is what we're trying to accomplish, but we're going to put some of that responsibility on you. I'm not going to come after you with a stick and try to figure out how to get the cost down, but your space the best, so you need to be empowered there. I think the other thing that was unique for us is obviously we're in the business of giving folks money, right? So obviously when the economy deteriorates, naturally what we gravitate towards is how healthy are our customers, how healthy is our platform in terms of funding availability through the capital markets, and just making sure that founders and operators are well prepared for what we already thought, last spring, last summer, what is going to happen. Now, did it happen faster than we thought? Yeah, absolutely. I think, I'd be lying if it didn't. But at the same time, we tried to make sure when our account executives have conversations with CEOs, CFOs, VPs of finance, that they're well aware, hey, look, here's your runway, right? And some of these folks don't naturally have a finance background. So we're actually trying to help them help themselves to build healthier businesses, which in the end benefits us because our platform is going to be healthy and because all of our investors are going to be happy. So I think that's maybe a wrinkle in just what Pipe does as a business.
Yeah, definitely. So accountability sort of sums up, not just from maybe like you mentioned IT directors there, really staying on top of what they're meant to be doing, but, from C-levels as well. Really, really interesting, Lucas. Yeah, great summary, everyone. I think, let's get absolutely stuck into these 4 strategies then that we're going to cover. I think the first one we're going to be starting off with is the importance of forecasting for an unclear future. So, Danielle, when it comes to the topic of reforecasting, what scenarios are you planning for in 2023?
I think, as mentioned gently before, typical finance, I know, a little bit of pessimism around your revenues. I think that will keep us grounded and make sure that we're accountable to our commitments. I think also there needs to be a focus on how can we offer more to our customers with less, but also where we can add more value and make sure that we're growing with them, supporting them in this journey, because we're all going through this period together. I think in terms of forecasting, continued focus on your operating expenses, where are your opportunities to reduce, what are the nice to haves, and then your cost of goods sold, because whether your sales goes up and down, this is a fixed measure that has massive opportunity to improve your bottom line, which again, previously was not looked at because it was growth at all costs. And now it's just like, what is actually making it to the bottom line once your revenue comes in the door? And I think the most interesting aspect right now, and Lucas touched on it as well, is your cash runway. What are your cash needs? And I think accuracy in forecasting here is critical, and having that commitment from our organization as well to commit to what we said we were going to spend, and any additional spend that we will find the savings elsewhere to make up for that. As we all know, cash has gotten more expensive. Valuations are down. So as a business, you have to be fully aware of your liquidity and what your cash runway looks like.
Yeah, really interesting point, particularly on the accuracy. The figures aren't adding up, then, how can you potentially forecast for the future? Really interesting. I think just adding on that, Julian and Lucas, both Pipe and Spendesk have raised, significant equity funding. Yes, maybe what systems did you put in place to manage that? Starting off with you, Lucas.
Oops, sorry, I was on mute. Naturally. So I think the first thing, and I don't know that I would necessarily call it, a system, but it's just a good finance team. A few folks with good heads on their shoulders, right? When we raised our first institutional capital, it was just me, right? I was, basically the guy putting together the budgets and the investor presentations and doing the accounting myself with a couple of external bookkeepers, right? I did it all. That's naturally non-scalable. So I think making sure that you have a healthy blend. It can be a small team, but a couple of generalists that can wear a lot of different hats. But then for whatever it is really important for your business, for us, that is risk management, for us, that is capital markets, finding a couple top-notch experts to give you superpowers as a finance leader. And I think that's the first thing when you raise capital that I think makes sense, because you obviously want to make sure you deploy it in a cautious manner. I think the second thing is systems. right? Making sure that, from spreadsheets and maybe, QuickBooks Online, you move on to more enterprise-ready systems, whether it's across, treasury management or accounting or FP&A. And then I think last but not least, and that's, I realize we're in a very fortunate position to be in, but is, actually having an investment plan, having a little bit of a longer range model of how you plan to deploy that capital, and then making sure you set up, and obviously that became even more important over the last weekend, making sure you have the banking infrastructure in place to either, buy US treasuries, put it into money market funds, and basically having control over where's your cash going, when is it coming back when you need it, right? Making sure all of that is set in order.
Definitely. And I think, Daniel, you even mentioned earlier as well about how it's gone from finance being a integral part of a company, and how it's definitely shifted. I think Julian, it'd be great for you to sort of add on that in terms of the equity funding that's been raised.
Yeah, I would say +3 on what Lucas just said, but basically I want to add something. So maybe on the team side, I think to me, so it's more of a mental model or mental system that you put in place. So it's not a technical system, but first, you need to have this good folds, head on the shoulders. Really agree with that. Very simple, but in theory, not so easy in practice. But basically, I think one mental model that I like is when you raise a lot of capital, it's only positive, but we kind of force ourselves to make decisions as if some of that cash weren't there, right? So asking ourselves, what would we do if we didn't have this cash? And I think it helps a lot in what was discussed before, making the right decisions in terms of spending, in terms of how you grow your top line and so on, because, it's when you have too much cash, you can catch the Dutch disease and it's never good for anybody. Then, +1 on how you manage your cash and, no long-term maturities, and be very, I think two things. Basically, be very careful and check with your board. I always check, that, they're okay with our policy and there's nothing funky. And the last thing, diversification, etc. I mean, everything, that's unfortunately maybe some companies have discovered over the weekend, but that's good old advice. And the last thing I would say is, on systems, we are thinking about implementing a treasury management system, TMS, for the acronym, and not decided. We can do a lot by on Excel and common sense and so on, but thinking about it, I had that in a previous experience, kind of loved it. So back on the table.
You mentioned you're looking at a treasury system. I'm sure loads of A's like me are going to be leaving you goodness knows how many voicemails now, Julian, trying to outreach you with their systems. Well, brilliant. I think that's a great summary of forecasting. I think great if we move on to the second strategy, which is automation, which I know we've mentioned a lot about today already. CFOs can use this downturn as an opportunity to invest in digital technologies such as automation, AI and analytics that can help improve the efficiency and effectiveness of their operations. Are there any solutions that you've come across that you want to implement in 2023? They mentioned briefly Treasury there, Julian, but maybe any others. And if so, what are the key things you look for when it comes to your SaaS stack? Considering, as mentioned before, some are deemed as nice to have, some are deemed as necessities. Julian, it'd be great if you could kick that one off.
Sure. So we're quite lucky at Spendesk. So first we have Spendesk, which automates a lot. So we use our own product, obviously, right, for pre-accounting and managing all the spend, invoices. It's not just about travel and expenses. It's everything you spend. Don't deal with the salary part, but all the rest. And then thinking about TMS in terms of how to automate more and do things in a more, let's say, square way. FP&A, we're really well equipped it's just fantastic. We continued to, I think it was about increasing or improving our use of the products we have, but basically, sometimes you buy a product, but you use 10% of its capacity, and so I think we've become quite good on the FP&A side. I guess the last thing, and I'll hand over, is when thinking about automating, we always do at least a back of the envelope return on investment calculation, right? Because sometimes it's like, okay, we need to automate, but it's not always a complete no-brainer. Usually it is, but it's good to have the ROI in mind.
Definitely. I think making sure that stuff you are investing and using is really important. A really great point you mentioned there, Julian. Lucas, it'd be great to get sort of your insights as maybe the nice to have necessities and on all things automation.
Yeah, I mean, I think in terms of necessities, right? Like, I think making sure that, I think what Julian said, right? Like that people actually utilize the systems that you put in place and they don't default back to, random Google Sheets or Excel files flying around. That's probably like the biggest challenge that will in perpetuity exist, because that's where folks grew up in, right? In terms of their careers over the last, couple of decades. But I think, the key thing, the other necessity is really making sure that the systems talk to one another. Right. I saw an interesting tweet the other week from a founder that said, his Stripe account, his QuickBooks, and his bank account basically, or some other system, I think it was on Mercury or something, showed 3 different amounts of revenue. I found that, incredibly funny, because I think that that's the natural thing, right? If you have a very sophisticated business model, customers in different currencies, different products, different pricing structures, all of a sudden data might be all over the place, and it's making sure that everybody is actually operating based on the same kind of like source of truth. And I think for that to happen, I think the systems need to talk to one another, right? And there needs to be some kind of reconciliation process that hopefully comes before your controller and accounting department are getting the books ready for the annual audit, right? Actually operating based on the accurate information is much more important. In terms of, new things, nice to haves, I'm particularly curious about kind of, large language models and ChatGPT and what folks are doing on top of financial products. I think I've had outreach from 4 or 5 Y Combinator companies that are building exactly that. I've played around with it a little bit. It still feels very gimmicky, but I think like somebody's going to figure this out. And I think that will make our lives a whole lot easier, because if somebody's like, needs to ask what is their budget for X, you will at some point just, give your CMO or give your chief revenue officer access to this tool, and they can just like ask basically the software without actually needing to be a power user of the underlying software, which I think is a massive time saving for finance teams. And then I think the other thing that I've always been fascinated with is the folks that are trying to innovate on Excel. There is a couple of apps, I think one's called Equals, one's called Causal. They're all trying to do the same thing, which is replace Excel, which hasn't materially changed in 30 years, with something that kind of looks like it, but better. But nobody has ever been really able to crack that code. So I'm very curious whether somebody at some point actually manages, because all of us in finance are super used to just dealing with Excel files.
Definitely on that with Excel. And I think it's really interesting you meant about time saving from AI and stuff like, was it ChatGPT or whatever it's called at the moment, which is saving time for me writing my sales emails. I think the time saver as well from like systems not talking to each other. Time is money at the end of the day. Spending time, tools that maybe aren't integrated. That's a really interesting point. Danielle, great to sort of get your addition on this automation piece and nice to haves, needs to haves.
Yeah, I think it's great to know that anything that's input related can be automated. But I think to Lucas's point, there needs to be a focus on source of truth and make sure that the input is accurate. If not, you're hurting yourself more than you're helping. So I think there's probably a tool for almost every thing you can think of in finance, but I think measuring what will actually make sense is important. And to your point, I think the critical thing now, as Julian pointed out as well, to make sure your FP&A is equipped. So I think this year as well, that's the first investment we made, making sure they have the right tooling to make sure that they're doing the forecasting, the budgeting, and also able to roll it out, right? Speaking of empowering your teams to govern and make their own decisions based within the budget constraints, I think FP&A this year is definitely the most critical area in terms of tooling to invest in. And I would be, of course, remiss not to talk about cost of goods sold and mention how Paddle does the end-to-end solution for software platforms. I think consolidating some of your spend with one single vendor can greatly offer an opportunity in pricing as well. And so for Paddle to take off that whole middle piece that you don't have to negotiate your invoicing separately, your payments separately, I think that could add a massive automation to any company trying to scale their costs, scale their business, and doing so responsibly. So that would be my advice.
Great response. And I think, you touched briefly on sort of the biggest opportunity for automation in finance there in FP&A, but great you could add on that, Lucas. Maybe what areas do you see the biggest opportunities for automation in finance?
Well, I think I alluded to it a little bit earlier, right? I think like the truly innovative piece is going to be on the output front, right? And can somebody actually layer in like automation on making sure, whether it's the beloved board decks getting created automatically or whether it is, just asking ad hoc questions. I think that's where like, the real innovation can happen. I do think historically and still to this day, making sure that all of the, call it recurring workflows, like anything that's a workflow that is rules-based, picking those off one by one and making sure that all of your talented folks in the finance department aren't spending 60% of their time parsing things from A to B and back from B to A and, reconciling manually and all of those types of things, right? I like to think that, there's always this talk around, automation taking away kind of, some jobs or whatever. I actually think it's just going to create much more interesting jobs. Right. I think there's a lot of things on FP&A, for example, bits of analysis that we actually never get the chance to do. Right. We basically like put things on like the long list of, we should really probably dig in there. It's not really a problem yet, but might be at some point. But you never get around to it because you're spending a lot of your days actually just getting to the core 5 questions answered to distribute to either the executive group or your board or something like that. So that's how I view that.
Definitely. Sounds like a long to-do list. I'm not envious. Julian, it'd be great to get your insight into maybe the biggest opportunities for automation finance right now.
So I'll be brief, but basically, having one source of truth, not duplicating where you put your data and the link with automation, I guess, is basically the integrations and how you link your systems together, because I guess the first step you go through is you start automating process by process and you have all these nice tools that you want to increase your usage of and you want to make a better use, but then they have to talk together, and basically you don't want double typing, which is subject to risk of error and so on. And basically in terms of internal control, when you have different systems that are fed with hard data from, not necessarily different original source, but it's an issue and a risk. So basically, even if it's the same source, you can have, typing errors and so on. So one source of truth, and then try to make sure that everything's linked so that you don't have these risks, and basically you improve the reliability, internal control, etc.
Definitely, really interesting point. And it's implementing any sort of new tool or automation, there's risk with anything, I guess. Maybe Danielle, it'd be great to get your insight. When you do implement a new digital technology, isn't always smooth sailing. It'd be great to understand, what are some of the fails maybe you've had when it comes to automation, and what did you learn from these fails?
Yeah, I think it's, for me, it's interesting hearing what Lucas just shared as well. For me, I've always told my team, automate your work and you'll never be out of a job. I think historically there's been a fear of automation, but I absolutely agree. Automating the mundane tasks enable the human intellect to do so much more interesting things and also add so much more business value, right? Yeah, but in terms of failed implementations, I think Julian kind of touched on it as well. Automation doesn't just happen. It needs to be implemented with intention and to be able to really maximize and utilize the automation you're building in. And I think also a great example that Lucas shared, if you don't take the time, your sources are all going to have different metrics and different outputs. So I think it's important to assess the timing and tipping point as well of implementing some of these automations. Are they more cost effective than hiring sometimes temporarily? But also realizing that sometimes you'll have to temporarily expand your team to be able to have a successful implementation and utilization, to be able to really implement and leverage what you're automating. I think we've all had some failures with automations. And I think we shared one today as well, where you have different sources of truth. I think one common cautionary tale would probably be anything that a salesperson is telling you, take with a grain of salt. If they're saying 100% automation, assume it's going to be closer to like 75 to 80. My recommendation is definitely, like ask to speak to customers, because a customer who loves the product that you're trying to buy will give you a realistic picture of what actual implementation looks like. I think one of the spaces that I'm a little surprised that there hasn't been better innovation out there is invoice processing. We still see tools struggling with currency and with entities, and I do suspect until we move completely to an e-invoicing environment, we'll keep dealing with some of these challenges.
Interesting. No, great insight. Thank you everyone for covering the number 2 on the sort of key strategies, which is automation. I think moving on to the third strategy, again, one of the most important strategies. We've spoken a little bit before about controlling operational spend. I guess every company and business model is going to be affected differently in 2023. Julian, what are the most pressing challenges you're working through, and what solutions have you landed on when it comes to controlling operational spend?
Yeah, so first I would say, I guess you have to have an 80-20 approach, like see what's big, see what's small, see where there's potential, to optimize. Otherwise, you just waste time. So it's very classic, but you just open your Google Sheet or whatever system and just rank, and and it helps you prioritize, because you cannot do everything at the same time, and you've got to evaluate the impact before doing potentially stupid things, like cutting into the muscle or just trying to save on very small things that will frustrate everybody. So I always give the example of, okay, you can cut the coffee to employees, but honestly the impact is negative. I mean, you may save a bit in coffee, but not overall, so now when the second thing is, it's you have to make it uneven, in the sense that reducing, and telling everybody in the company reduce by 15% homogeneously doesn't make sense usually. You'd better off like cutting 100% what does not work, because there are always things, and that's fine. You realize that one day, but you have to cut them. You have to boost some other things that really work. So it's not just about, for some aspects and costs, it's not just about reducing, it's about reducing 100%, right? And sometimes it takes a top-down approach to really question, say, look, we've always done like that, but in fact, let's try without, okay? And that's very true when you have too many nice to haves kind of cost. The last thing is, I guess, it's not just the finance team. It's been said, right? Lucas insisted on it. The finance team is not the one cutting costs. You have to have everybody on board, and to empower all the cost center managers, or whatever you call them, but basically managers, and in fact individual contributors across the company. Everybody spends in a way or another. And so the way we do it is we do a lot of information or even training on, it's kind of education on, okay, how do the financial statements work? Why do we want to work on cost? How do you want to work on cost? How can the finance legal team help, for example, in negotiating better terms, better prices, contractual terms, and so on. And here you have to just repeat and repeat, use different channels. I mean, the basic of communication, basically. But it's not like it's far away from the kind of, okay, finance it's in its corner, and you have to be kind of, outgoing. Also, most importantly, I think, offer your help and be constructive and not just be the police around like, okay, I'm going to cut your cost. No, let's work together.
Yeah, it sounds like collaboration is key, Julian, and ensuring that you have your latte in the morning as well. Perfect. Following up with that, I guess maybe Lucas first, and then Danielle can go into this as well. How important is it to understand, the company's current state of play when it comes to their company spending in times like these? And maybe what impact can it have if this isn't being tracked?
Yeah, I mean, I think it's everything, right? Like if no matter how great your product is, right? I think, a lot of technology companies, at least those, founded over the last couple of decades, are initially loss-making entities, and they need to get to either the break-even point at some point in the future, or to get to kind of like the metrics that allow them to raise incremental capital from either existing or new investors. So I think if you don't understand how much money you have and what you're spending, or what speed you're spending it, everything can go wrong, right? Like you can, just fall short of that milestone that would have allowed you to kind of like, get there. And I think one big misconception there is, I think it's often gets emotional, right? I think, a lot of founders are, and this is just what the fundraising markets were, especially in the last few years, incredibly bullish, right? Like any model that's been sent out is a bull case, right? And they at some point start drinking their own Kool-Aid, right? And they don't, at least internally, have the honest conversation with their executives or with their finance departments. They're like, look, we can, increase sales by 30%, 40% in the next 6 months, all we want. But like, what is actually going to happen, right? Like how much money am I actually going to spend to acquire these customers, or am I actually realistically able to acquire those customers? And if that doesn't happen, you don't want to fall flat on your face, but you want to actually understand what the real runway is, and at least a base case, ideally also a bear case, right? What happens if there is some incremental churn or something like that? If, customers' budgets get smaller. And I think the second misconception is you need a CFO or VP of finance or, a specific system to do this. You just need to go to your bank account, download the last few bank statements, write down how much you're spending on all key categories, and then just roll that forward. And that's already a great start. If you can figure out what you have spent on average the last 3 months, and you just roll that forward, you're going to be a whole lot closer than you might be today, just by virtue of a hypothetical model that you built once upon a time. So that's probably the key danger there.
Definitely, just going out of the way to have visibility, right? Perfect. Danielle, it'd be great to get sort of your addition on this. Maybe the impact as well, if things aren't being tracked, and maybe how important it is to understand the company's current state of play when it comes to managing company spend in times like these.
And I definitely agree on making sure that you know where you're at and realistic about what the next case scenarios, as you said, base case, bear case are. I think that's what we need in place to make sure that we're doing the right thing on time. Because often if it goes the different direction, it will be far too late to make a decision at that point. You'll still be left with a decision to make, but you'll just limit your options. So being fully aware ahead of time before anything goes belly up, I would say, it's definitely critical. I think for us, making sure that we have a good control environment in place before expenses are committed to is important. So next to just tracking and forecasting what we expect our spend to be, also really work closely in collaboration with our departments and our teams, like to make sure that we're not making any additional or incurring expenses and long-term commitments that have not been reviewed by the finance team. So, and I think in a mature environment, you definitely would have a PO system or process. As Lucas mentioned, sometimes bare bones, what can you do? So what we have also done in addition to looking at some of the tech solutions is just make clear to the organization who owns what. So if it's any new engagement, go to FP&A, and then you have discussion, has this been provided for? If it's existing commitment, you can talk to your financial controller. To have like clear ownership to the business as well, to know like, who do I need to talk to about this? And not that they're being bounced around, because that can be also frustrating. And it can really impact negatively the operational flow and to be able to expedite some of these executions. So I think that for us has been also important, implementing the controls, not just after the expenses being incurred or looking forward, but also before we even make a commitment. Do we have the right collaboration with our business partners across the industry here in our teams to make sure that we're aware of them?
Yeah, brilliant. No, really, really interesting. Particularly on just the extra finance review. Any tool that come in, it's very easy to just add something onto the list. But no, definitely having that final step review of finance, really vital. Brilliant. I think going on to the fourth and final strategy, it's being proactive and transparent in this era of change. Let's dig a little bit deeper, and I've got a couple of questions to you and topics that I know many finance leaders would be quite interested to hear about. So, as a finance leader of a company, it often falls the CFO or VPs of finance to communicate cuts or big changes to stakeholders and employees. I guess maybe as finance leaders, how can you do this in a way that's transparent, compassionate, and effective? Hard-hitting questions here. Julian, it'd be great if you go first and kick things off.
Yeah, tough question. It's, I guess, on transparency. And as I said, we try to do a lot of training and making people aware. And we're a very transparent company about numbers and etc. So inside the company, it's it's a permanent effort. Now we're not facing that, so I can't give very concrete examples. But I think what I would say, in order to create the transparency and awareness and full understanding, two things. One is make sure that managers know their orders of magnitudes. When you have to optimize, you can waste a lot of time optimizing tiny things, but so it's surprising how how people in a company don't know the numbers. But even the order of magnitude. So I would first insist on that everybody has the kind of understanding of, okay, total payroll for the company or for such country or such activity, is it 5 million, 7, 15 or 30? It's not about being 5.5 or 4.8, but what's the order of magnitude? That's really, really important. And then the way we do this communication, in addition to these trainings and so on, is we actually help all cost center managers with cost run rates, especially when you're growing. It's important to have in mind the run rate. So basically, it's your compared to average speed, it would be like your instant speed. So basically it's your last month or last quarter, but definitely not a year, cost base times 12 if you took a month, or 4 if you took a quarter, but not just rely on okay, over the year that's the number, because it can be very misleading, right? If you're growing fast, the cost at the beginning of the year, or the revenue, by the way, has nothing to see with the one at the end of the year. If you say to people, oh, you spend your budget is 100, maybe it was 10 at the beginning of the year and 40 at the end, right? So if you're in the middle, you'd better say, oh, by the way, forget about the average, right? You're at 25, for example. So that's another thing. I guess, in terms of the communication and how you would do that, I guess you can do cuts for financial reasons, right? Extending your runways, and you're right. There's most of the time the financial reason or background, especially in people's head, but fundamentally you do it, because it makes sense, and it's good for your business, and it's there's no happy company that is completely dependent on debt or investors forcing you to do things. So there's huge value in anticipating, and basically I think all these things have to be planned. They should not look or sound improvised and rushed. There's a huge gain in not rushing it, and be prepared. Prepare the what, the how you communicate, and so on. And back to your point, and I'll finish on that. I think the really legitimate person, role to do these communications is the CEO, because, as I said, you may have a financial reason behind and so on, but that's rarely the only one. And I think CFOs have enough kind of work on doing that on a day-to-day basis. What shouldn't happen, where it doesn't really, it can be communicated by the CFO, but it has to be reinforced and backed by the CEO and show strong alignment. Otherwise, it looks like, okay, we have a bad cop here, but is not aligned, he or she is not aligned with the CEO. That's really bad in terms of signaling, I think. I'll stop here. Sorry, I was long.
No, really, really interesting. Yeah, I think great, Danielle, to sort of get your addition on this as well. How you're communicating to cuts and changes.
Yeah, I think there's been some cost changes. I think also we've seen a lot of impact in the industry on people and team reductions that have been very challenging. I think as a CFO and finance leader, the most important thing in this, I think, is to be human. I think that there's a multiple array of emotions, and the impact is real. And I think making sure to be transparent in this as well, like share the reasons why, but also be human in how we communicate, both to our parties who are exiting the company, but also those who are staying. I think it's incredibly important to remain respectful to those who did leave, towards both internally and externally. I think that's critical. The other thing I found that to be really important is to also look forward at where are we spending money now that is contradicting the cost cutting that we've just done, or can be also perceived in a negative light by the organization. So I think whenever you have to make reductions, be it in cost, be it in team size, I think it's really important to consider how people are experiencing these reductions, and to be respectful and to be consistent in a decision. Not to see that we're overspending somewhere else and thinking like, oh, we maybe could have leveraged that differently. So I think that's very important to look at how our spend is also perceived and received, and be transparent in this to the company.
Definitely, really, really important point, particularly on the being a human side. Definitely, Lucas. Great to get your addition as well.
Yeah, of course. I think for those types of things, I think the journey really starts before things are tough, right? I think you should have the kind of transparency that Julian and Danielle alluded to ahead of time, at least within the executive group. It depends on the company how transparently they are with individual contributors. I think there is no clear guidance as to how that should work, but I think at least along the executive team, everybody should kind of know when things are great and also when things are deteriorating. And then obviously, naturally, they will know when things are bad, right? And when things need to start happening. I think when that is the case, then I think decisions need to be made quickly, but execution needs to be thoughtful, as Julian alluded to. So I don't think it makes sense to drag out the time frame of saying, hey, look, this product is clearly not working, or, you know, here we really need to make cuts. I think that should happen. We should be decisive with the department head, with the CEO and the CFO, kind of like everybody together. But then the implementation needs to be thoughtful, right? Like you can't cut twice. Like you need to cut once, and it should work. Otherwise, you're gonna have a problem with the folks that stay, right? You want to keep them motivated, obviously. In terms of what, I think, you know, naturally one should always look to see whether there is a place to keep team members around that are, you know, full-time employees that have worked for the company for a while. It's not always possible, but I think, you know, if you have to balance between, you know, a contractor that, you know, might just dial in remote every once in a while and the person that's with you in the office every day, I think, you know, everybody naturally should gravitate towards making the right call there, just also for the folks, again, that are going to be staying. And then also obviously cut anything that is easy to cut, right? You know, we have historically, and I think that's, you know, sign of the times in a remote business during COVID, you know, we had Google Docs and Notion and Coda and all of that. Now, does it make a dent? No, but it's A, easy to cancel, and B, it's absolute nonsense because nobody could find where any of the documents are. So obviously, out of respect for folks that you might still have to cut, I think you need to make sure that you kind of have your ducks in a row with all of this, you know, wasteful spend, even if it's only a couple $100 a year here, a couple $100 a year there. I think like those are the base level things you need to make sure as a CFO with your executive team that are taken care of before. And I think last but not least, I think, you know, the CEO, I agree with Julian there, needs to be at the front there, but, you know, take responsibility. Hey, look, you know, we tried something here, whether it was like, you know, an expansion into a new segment of the market or a new product that we launched. It didn't pan out. You know, I take responsibility, but, you know, we still have to do what's right for the company, and we need to move forward. So I think it's not only the transparency, but also saying, hey, look, we messed up. We as an executive team, I as a company leader, I as a team leader, and, you know, it's not gonna make it any less hurtful for the people impacted. But I think at least it shows to the folks staying that, you know, you don't take those things lightly. And it's not happening via, and it should never happen via email, right? Like as we have seen with some of the tech giants. I know there's a lot of news around Twitter. That's, I don't think, the right thing for you know, folks that have given you their all for a number of months, quarters, years, right? I think there needs to be a face-to-face or at least a Zoom conversation.
Yeah, definitely. And I think it's interesting, you all mentioned about sort of the executive team and, you know, CFOs need to be aligned with, you know, not just the CEO, but, you know, the CMO, CRO, CTO. I guess maybe, Danielle, you know, during a time of economic downturn and, you know, highly stressful environments, you know, these relationships potentially could be fragmented. I guess how as a CFO, you know, you're ensuring you have the right alignment with these key stakeholders, and, you know, slightly awkward, but how do you avoid being perceived as the, you know, bad, tough guy in the business? When in reality, potentially your decisions are for the greater good and, you know, longevity of the business.
Yeah, I think together you build a relationship on trust as well. There's a underlying support that is needed. If your CEO and CFO are not aligned, it's very difficult to run the business, and that's just it's just fact. So I think the alignment between those two, like just as CFO and CEO, are the most important, because also that models the rest of the team what that relationship should look like and how the support should be extended. So I've been fortunate that our executive team is very involved in our finances and very collaborative as well. I think it took time, and it takes time to build that. But I think everybody's committed to work together. And I think the messaging has to be the same. We're in the boat together as leadership as well. We support each other's decisions. So that alignment is the biggest. And honestly, if you have a budget that everybody's worked on together and committed to, you shouldn't have to be the bad guy that often, because, you know, you have the buy-in and you have the input from each business partner. So I think that makes your job easier.
Definitely. I think it's just something that we've mentioned the whole time, just about collaboration, alignment, and everyone's got this clear vision as a team moving forwards. Brilliant. I think, you know, it'd be great to understand, you know, from you guys, sort of final questions, summarizing things up. I guess, you know, maybe starting off with you, Lucas, you know, to the new CFOs experiencing this economic challenges for the first time, what advice would you give them?
I mean, like, let's be real here. during the financial crisis. I was in my, late teenage years. This is my first, real crisis at the helm of a company. I think, early 2020 when COVID hit, we were 5 people pre-product market fit. So I think, this truly is the first time. Now I think that's fine. It's actually the same, I would argue, for most leaders in kind of, startups, early stage companies. For a lot of them, it's the first real downturn, likely prolonged downturn, right? And I think it's the same on the investor side, right? Like if you look at, the partnership at, whatever, one of the big funds like A16Z, like half of the folks aren't any older than I am either, right? So I think, we're all learning, but I think like we should at the same time make sure we take the resources that are out there. There's a lot of, usually smart people love to hear themselves talk or, like for people to read their thoughts. So I think, whether it is, investor letters of the shareholder letters of the great founders of the last couple of decades or great investors, whether it is, Buffett, Bezos, whatever, there's a lot of resources out there. It's not the same thing as getting, punched in the mouth by, all of a sudden your revenue dropping off a cliff, or you actually having to go through a RIF if you, didn't quite make it to the next fundraising target. But I think at the same time, you can get a lot of, learning by reading, learning by watching. So you are at least a little bit more prepared than you would otherwise be. And then listen, I think the last thing that I always try to tell myself, no matter how, easy or hard it is, given the moment in time, it'll always go back up, or when, times are really great, it'll always go back down, right? I think, we just came out of a very cushy, cozy environment for a couple of years. And it was clear that the party was going to stop at some point. I think, it stopped a lot more vehemently than most of us thought. But the same way now, I think, everybody needs to, calm down a little bit and know that overall, and it might not, be in time for every single business or every single great idea, every single founder, but over time, things shift back up again, right? Like it's like the perpetual motion of kind of like the economy. So I think, it is what it is, and we'll roll with the punches.
Definitely. Danielle, what advice would you give?
I think go slow to go fast. Stop, think. I would say violently refuse to join the panic culture. I think it's very easy to start running around like crazy, feeling like you're actually making the right moves and you're not. I think getting educated on what actual tasks or action you can take is important. So make sure you do the things that you need to do. However, make sure after that you take a minute and take inventory of what's happening and keep calm. As Lucas said, it comes and goes. It is normal. It's almost just like life. Everything always happens at once and then nothing at all. And that's also the same in business, right? So I think that just staying calm, taking meaningful action, and making sure that you keep that confidence and know that it will come back around as well is very critical. So go slow to go fast.
Brilliant advice. And Julian, your fun piece of advice?
Yeah, I'm older, so I've been through several crises, right? I was looking for a job after September 11, more than 20 years ago, and so on. Went through the great financial crisis, but basically, I would say, obviously, you prepare, and when what Lucas said is there's a lot of resources, and listen and learn from those who know, and so on. But trust also your common sense in the fact that we've been reinventing some areas, and finance was kind of one of them. But in fact, it's a fad, right? It just passes at some point. Reality catches up, and interest rates do go up, and so yeah, common sense, stand for what you believe in, and in terms of the actions, as Daniel said, be concrete, right? And shoot for impact and not theory. So yeah, but there's a lot we can do just by taking a blank sheet of paper and thinking on our own and not being influenced by whatever is around, right?
Definitely. Oh, that's brilliant advice, everyone. So yeah, that brings us to the end of today's webinar. Thank you so much to all three of you, Julian, Lucas and Danielle, for sharing your insights today. It's been absolutely brilliant. It's great to explore the views around, ways to tackle, the economic downturn. And I can assure you that, all our attendees will be taking away some valuable learnings from the discussion. Well, I definitely am as well. Thank you so much for the wonderful audience, for your participation. And we look forward to seeing you in a future webinar. And yeah. Bye, everyone. Lovely seeing everyone.
Goodbye.
Okay,
Bye.
thanks, Julian. Danielle.